So we're going to move right on to another question from Chaotic Enigma.
Oh, wow.
Fancy username. Chaotic Enigma says, as a single person without any kids, do single people need to plan personal finances any differently than a dual income married couple? Save more for healthcare and retirement? Other considerations? What do you think?
Well, you know what? It's interesting. I'm going to say no, but let me tell you why I'm going to say no. I don't think that single people need to plan differently because all planning is really a function of what are your goals? What are the things that you want money to, what are the things you want money to allow you to do? Is it to travel? Is it to have a family? Is it to be financially independent? Is it to not work? Is it to, you fill in those blanks. Well, what's really, really interesting is the goals of a single individual with no kids might look different than the goals from a married individual who has kids, right? Like what they want to do at different stages and stations of life might change. So I'm going to argue that the behaviors and the patterns are not necessarily different. What's different is the finish line that you're working towards. Maybe as a single person, you say, hey, I only want to work until I'm 50 years old. I really want to do this fire thing, and then I want to travel around. Well, that might look different than someone who says, hey, I really want to work until my kids get out of college. I want to make sure I pay for that, and I want to make sure that I have all of these things lined up. You might have different goals and priorities, and it's ultimately your goals and priorities that should inform the decisions you're making around savings and how you're attacking that.
I like how you laid that out because a lot of the things I was writing down were kind of retirement type things, but I do think it's also going to impact like life insurance and estate planning. It's going to probably be more simplistic in some ways. So maybe you have less expenses on that, even in the building years. It really depends on where you are in the journey. If you're in your 20s, 30s, and 40s, it's going to look different from somebody who's in their 50s and 60s with this question. So, but I will tell you what I liked what Bo was talking about is that your result might be different, especially like long-term care insurance. If I was somebody who was single and you don't have kids and you don't have a spouse, you might want to think more, long-term care is more of a peace of mind thing that I tell people to consider when they look at getting their 50s. Yep. And in that one, you kind of will be in the driver's seat, especially if you're worried you won't have somebody to speak on your behalf. You can go ahead and make some of those decisions yourself to make sure you make those decisions while you're able-bodied and so forth. Legacy probably looks a little different if, because a lot of times when we have prospects and clients come on board, they have these goals to leave this amount of money to the children or not to leave more than this amount to the children. You're not going to have that. So you'll need to be thinking about, because you're probably still going to be tremendously successful, and you've got to start thinking about what is this money's why? What's the purpose? What are you going to do with this? Make sure you're just putting in that effort to understand how those decisions are impacted and what your savings rate and your goals. It's back to Bo's point. I think he laid it out beautifully. Your priorities and your goals are going to shape what these things look like in the long term.
Yeah, I'm just thinking through, like logistically, like maybe for a single person, it's 6 months of expenses versus 3 months of expenses for an emergency fund. Maybe for a single person who if you don't know that you're where you want to be for the next 5-7 years and you don't have like the job, maybe home ownership is not like an interim term goal where someone who's trying to like start a family and establish roots, it is an interim term goal. So those kinds of things may look different, but what's beautiful is the FOO is still for you. Yeah. The FOO will still guide you, because no matter what your goals are, the financial order of operations is going to allow you to work towards those goals in the most efficient and effective manner possible.